Changes to the capital gains tax are now in effect, despite pushback from businesses, farmers, and doctors across Canada. As of today, when assets like stocks or homes that aren't a primary residence are sold and the gains are more than $250,000, two-thirds of that will now be taxable. Until now, only half of those profits were taxed. The higher inclusion rate also applies to all capital gains realized by corporations. Ottawa believes this will generate more than $19 billion in revenue over the next 5 years. Colton Praill is in our Ottawa bureau with more for us this morning. So, Colton, how will this change things for a lot of Canadians?
Yeah, for a number of Canadians, this won't have really any impact on them. This is something that a relatively small amount of people actually will realize in their lifetime. But for those who do, as you mentioned, it is a pretty significant change, especially for those farmers or doctors who have been future planning on the basis of expecting to pay a certain taxable amount. As a result of this, we've seen over the last few weeks people racing to sell some of these assets or attempting to sell these assets before the deadline. Because as you rightly pointed out, now today, if you make the same sale that you could have made yesterday, you're going to be paying about a 30% increase on taxes of what you could have done. It's going to jump from 50 to 67%, and that makes a very significant difference. What we're also seeing, though, is that there is concern that this is going to be potentially impacting productivity in the future. You mentioned those business concerns, fears that talent could leave to other areas that have lower capital gains rates or that wouldn't have to deal with the same sort of taxation practices. For most Canadians, this will not have a significant impact on their life, but we are already seeing the ramifications politically around this discussion and around the idea that this taxation either needs to be more fair or, on the opposite, from what the government has messaged, that it is unfair to businesses and those Canadians who have put in the man hours, who have put in the work, and had planned to pay a lower rate than this new inclusion rate.
So, for those who will feel the impact of this tax and spoke out, why do you think the government didn't backtrack or water it down at all, Colton?
Yeah, there are a couple of angles to this and a couple of considerations. One thought process is, and this has been put forward by a number of monetary policy experts, is that this is a way for the government to keep their deficit below $40 billion, right? This is something that was promised in the budget, but that was introduced much later than that. And so as a result, you had roughly an 8-week period where you were able to understand that this was coming and try to realize those capital gains at a lower inclusion rate. And what that does is it brings in tax revenue for the government immediately. It's an injection of cash now rather than later. And the predictions are that this will bring in about $7 billion this tax year. And then, like you mentioned, about $20 billion over the next 5 years. So that's one possible angle for why they did this in the manner that they did this. As for why they made these changes generally, they're pitching this as an issue of tax fairness, as an issue of we want to pay for some of these programs that we have announced, like dental care, like pharmacare, like a national school lunch program, $10 a day daycare. We want it to pay for these without having a massive increased tax burden on the majority of Canadians. And so this is a way to pull from a very select few who are realizing a large profit. In essence, you can get more money from a smaller number of people by doing this. That was the thought process. Whether that's played out politically, though, is up for debate, especially when you look at the reaction to this, because it's not just people who are impacted by these changes who are reacting negatively to them. Overwhelmingly, older Canadians, conservatives, higher income earners are opposed to these changes. Angus Reid did a study last week, or on the 19th, so I guess that's this week, and found that about 50% of Canadians are opposed to these changes. And the group that the government is trying to appeal to most, those younger voters, when they talk about tax fairness, while they do support it more than others, they're also among the least informed about these changes. They're the least aware of these changes. So even in the group that they're trying to target, they're not necessarily getting their message out there effectively.
Colton, thank you for that.